Joel Elconin here from Pre-Market Prep, spending a great day with Jeremy Alexander Newsom.
Folks from around the world, enjoy this Friday real life stock review. You are amazing. Thanks for enriching lives with us. You rock. Hey traders from around the world, it's your boy Jeremy Alexander Newsom with reallifetrading.com. Hope you're doing absolutely wonderful. What a wild week that has befallen us today. Look at this weekly chart. Oh man, looking straight up like death. It's a little gnarly out there without question. And one of the things that transpired, right, we got that gap up, which on the Monday stock review mentioned would fill, and it did. And the market was closed on Wednesday, and we really thought that we were going to get just kind of your nice rally, red to green rally. We more or less did with that gap down and the fade higher. But what was really interesting and really unexpected today was pretty much for us to almost take out and close below the low of SPY's candle from yesterday immediately. That does show a little bit of weakness, which makes me put on my hat that says that we're likely going to go a little bit lower. In fact, I'll give you a quick update from what my good buddy Joel Elconin said about the E-minis, the S&P futures, and his thoughts just going forward.
Just taking a quick look at this big week in the markets. Started out with so much optimism over the truce or treaty of tariffs, and man, gap up earlier in the week, got over 2,800. That did not hold. Quickly things turned around, and folks, I mean, I don't want to be bearish or super bearish, but we are coming down on that late October low. That was 26.03 even in the SPOOs. We had the rebound. We got near it yesterday. Coming down again. You got one of the top components, Apple, breaking down on a big support level. So 26.03 may even see that today, Jeremy.
Wow. A
close under 2,600. Bad for the market. Old support could turn into be new resistance. So Santa Claus just may be hanging in the North Pole and not getting around for the rally, folks. So long-term investors, you got to really look at that low from October. And if that doesn't hold, you know, make the necessary adjustments to your portfolio, cash or whatever things, you know, whatever instruments you use. I know there's some moderate CDs out there. I know they're boring and stuff, but sometimes making 2 or 3% is a lot better than losing 5 or 10%.
Yep, I agree with you about the levels. Very, very strong support, and it's kind of my thought process that, and it's been my thoughts for a while, that we probably do trade down into here, and then either we bounce off the 100 on a weekly on the E-minis, and if we don't, which I don't think we will, I think we'll actually pierce it and then retest. This will be the pierce that everyone's going to really lose their mind over, and this is going to be that super key price, or if we get some evening star reversals or something on the hourly or daily, it's going to get pretty frothy pretty quickly on the downside. So yeah, still going to be keeping a real close eye on just the S&P in general in these support areas. I mean, people did buy yesterday, but depending on if we close below this candle, that's going to be really interesting. So what I'm going to do is actually update you all in another 2 hours, depending on how we close. I'll catch you guys all then. So those were kind of his thoughts, a little bit of blend of my thoughts about what I think the market was going to do about this time 2 hours ago. And we did end up breaking down a little bit more. We closed below last week's low. Huge bullish engulfing candle with an increase in volume. So that's telling me that the SPY most likely is going to come down to the 100. And then, of course, we get to test these lows. We'll just see how rough things get. I mean, we could easily have a 2% up day on Monday. Would that surprise me? No, not really. A gap up, you know, a gap up and a run, that's totally fine. Here's the hourly chart. So a good gap on Monday, I'm all for it. If you did go long, again, at the low, the exact same low that we bounced off of, congratulations if you pulled off an entry there. I did play the SPY today. We day traded together, actually, Joel, myself, and a bunch of real life traders. Here's what we did, and you'll be proud of me. Here's the 5-minute chart. And let me do this. And this was it. So it wasn't too long after we got started selling off, right? Because this morning we actually went higher and then broke down. And we broke down pretty quickly. It wasn't until really the first white candle that came in, which was right here. This white candle, once that came in and then we immediately closed below it, I was looking at going bearish. But a few people in the trading room were starting to go bullish, which was a perfect, just pure, coin flip. Where is it going to go? So I decided to stay out at that point because my entry was going to be right below the low of this bullish candle with a stop a little bit higher than there. So when we broke down, we automatically bounced. We got the retest. Once this candle came in, believe it or not, I actually did have my moving averages turned on. So here's what the moving averages at that time looked like. So I just kind of pull those up really quick. You'll see that we were just crossing right below them, got this really solid S-curve, bearish engulfing candle. And I said, man, if we take out the low of that candle, we're going to go lower. And so that was the setup, and we did. We broke lower, and the target was 2Rs. And we hit it. We hit that right here. And then we got this little false afternoon bounce, another breakthrough, another retest of that breakthrough, another low, and so it began. What is really interesting is the amount of stocks that closed below their lows of yesterday. Apple. So I did try to take a bullish trade on Apple yesterday because, well, why not, right? We actually tried to bounce on Apple at the exact same price that we did just a week ago. So I did something bullish with some weekly options from the weekly options newsletter on Apple, and I got stopped out of those. The good news is I had a limit buy of $5 and it gapped down to about $4.75. And the entry was only 333 shares anyway, right? Which is, if you did $500 of risk divided by $1.50, you'll get 333. So we could only do 3 contracts and got a good limit. So didn't lose a full R on those trying the bounce. This is a big signal, kind of worst case scenario. I did not think this was going to happen on the SPY, on Apple, but it did. And what that is the fact that we closed below the 100 simple on a weekly chart and closed below last week's low. So it is my thought process on Apple almost unequivocally that we might retest a little bit, but after that move and after that failed bounce and after closure below support, if you're looking at playing Apple and we retest or even gap down or anything, probably retest on Monday, I would buy something that rhymes with put options. Most likely 170 December or January, depending on how long you want to protect yourself, you could buy even longer. But yeah, I think Apple's going to trade down a little bit lower. It probably won't just absolutely cataclysmically crash. But as I've been mentioning, the odds were that we were going to eventually break that 100. Something like this, could realistically occur. That was the last time that we really interacted with the 100 simple on a daily chart. And then the time before that was 2013, which we did get that white a little bit of a lower shadow. We closed below the 100, we retested it, and then we rolled down. And then the other one was in 2008, which again, both times you kind of got that lower shadow that tried to bounce off of it, and then it just simply didn't. So I'd be keeping a real close eye out for some bears that come into the markets next week on Apple. Same thing on NVIDIA. So NVIDIA today closing below that really strong bullish candle yesterday, which again, with an already weak chart, an already strong gap down, and already what I would refer to as a bearish trend, I am going to expect NVIDIA to most likely, again, probably we gap down Monday and then we trade up, retesting a little bit, because that's what the market's been doing. So again, if we gap down, we'll probably trade higher and then we'll most likely roll over, which is known as short the rip. So I've been a big proponent of buy the dip. Now it's going to be, there's going to be a lot of stocks out there that are going to be a little bit more on the weak side. Even if it only lasts one day, if we get a huge gap down on Monday and you're able to sell those puts that we bought at the close of market today, because that's what I was mentioning to a lot of the real life traders out there, you know, right before markets closing, really early this morning, let's see, where was yeah, 10:28. If Nvidia closes below 150.57, bearish city, and that was a good 3 points ago. So we got down. You know, if you go to the 5-minute chart, here's the 5-minute, and you know, here's the close right there. There's the retest, and there she goes a little bit lower. So anyway, yeah, some weakness on Nvidia, some weakness on Facebook. We've all kind of known that. Facebook had your pretty good evening star reversal pattern, and then you gap down and kind of filled lower. I think I'm going to be doing an official trade on Facebook that looks something like this. Breaking below 136.62, I would buy some protective puts or look to be in short. This pink line was the drawing that Mr. Squiggles did, and so far we're pretty much on cue. Now again, I'm totally fine if we do bounce on Monday, but the market's pretty much going to have to bounce, and it's going to have to be on Monday because any breaks lower, and we are going to continue to slide down overall. That's just my thought process. I missed an amazing trade on Ulta. A little sad about this one, as I did talk about this in the pre-market prep. If anybody got a chance to watch it, this morning is actually broadcasted from the Real Life Trading Studios here in Nashville, Tennessee. Bullish candle, gapping down, and here's how I was going to play it on a 3-minute chart. This was a late in the day afternoon setup that actually would have worked, you know, a little bit too well. But here's the 3-minute time frame, and this is what I wanted to do. So again, perfect gap and go. White candle came in, immediately trade up, rolled over, trade up, and this high wave candle right here. I wanted to short below that with a stop at 277. I would want to do that because, well, you got that previous resistance. This was a retest gap on a 5-minute chart. I figured that would probably retest. The stop looked good, moving average looked good, everything looked weak. And I just totally boofed on that one. Not sure how I missed on it, but I just never pulled that trigger for some weird reason. Anyway, Ulta just rolled over a few times, and the last time I looked at it, I was looking at 261.84 by 263.84, and I mentioned it was not official. This was actually the time that I was looking at it right here, and most likely I would have canceled it anyway, only for it to trigger and then roll down. But Ulta, beautiful, bearish gap and go today, putting in some timestamps for the bears. AMD also closing below the low of yesterday's bullish candle. Again, a decent degree of weakness on AMD, telling me that we're probably going to do a little bit of a retest and then, you know, a trade down lower. And again, we could gap down really strongly on Monday. I'm not saying we will, but you know, if we do on just the whole market, if we gap down huge on Monday, again, it probably will do what we've done the last 2 or 3 times. We had those really big gap downs into some support and get some type of rally that morning. So I'm not saying that you have to be bearish right now. Sorry, let me rephrase. I hope you did get bearish before the close of market, but if you're not already in the options market or closed, maybe if you get a chance to short something, you know, into the post-market, pre-market time frame, but keep an eye on it. Monday, this is going to make Monday a really, really fun open. And again, there's certainly some weakness out there. Even if we don't make a massive move lower on Monday, I'll be expecting some weakness on Monday, Tuesday to continue down. That weekly options newsletter also was bearish. I did 2 because I really did not know what the market was going to do. Had a bearish setup on Seagate Technology, STX, and STX broke down pretty nicely. Had that nice, cute little move, breaking some support. So be watching for that guy to just slowly creep down a little bit lower. Man, there's certainly some bear settings out there. Micron, ticker symbol MU. On the daily chart, it almost took out the low of yesterday. So, you know, if that happens, it's going to continue lower. Square down 7%, took out the low. Didn't close below the low, but took out the low of yesterday. So, again, most likely going to see some bearish continuation on Square. Trying to think if there's anything else specifically that's bullish other than Tesla. So Tesla today had a decent bullish gap, and I talked about this one early this morning. I mean, obviously it was a retest gap, but it did have and create a cute little run up at one point in the day. Here's the 5-minute chart. And for those who got the chance to be in the back trading webinar this Wednesday, I actually discussed the sentiment on Tesla, mentioning that that one strong bullish S-curve is all that you might have gotten. You know, with bullish retest gaps, and that really was kind of it for Tesla as far as the bulls go. And then once it took out that support low of the day, that was pretty much it. So it was a retest gap. I mean, we know that near the all-time highs. A lot of traders hopping into and getting into some bear call spreads. You know, in this 400, 410 for December type of time frame. I like the gap. It made good for an early morning move, but yeah, I mean, you know, a little bit of a retest. Well, the whole market's pulling back. Tesla's most likely going to pull back eventually and just kind of get some retest levels going on. Do have a bearish swing trade on Dropbox, ticker symbol DBX. This was the setup right here, 2268 by 2468. Pretty much just breaking the low of this evening star candle right here. So that evening star candle, that one triggered on Tuesday and kind of broke down a little bit today. And then as far as some other trades are concerned, the ones that we're in on some swings, NIO. So we got, that's the old setup, only half an hour of risk. So we're going to lose really small on NIO, but increase the stop to 669. And then Billy, BILI was another Chinese stock that, again, I wish I sold this Monday. It did go green for a little bit on the day, but I did move the stop up on that one. So hopefully we can lose less than an R. So doing my absolute best. I mean, the swing trades, there's a lot of volatility out there. The day trading is a smidge easier. I didn't show you all my day trades yet. So I showed you SPY, which was a nice 2R winner. Big Lots was a winner. This was a bullish fade, and it was early. So a bunch of bearish candles gapping down into a support. And the reason I faded it is because, you know, back in March, it gapped down and faded. Back in June, it gapped down and faded. And back in September or August, it gapped down and faded. Figured, why not? 3 or 4 bearish candles in a row. Yesterday was a shaved bottom candle. Yeah, let's look to fade. And here's the 1-minute chart. If I scroll up nice and early, this is the one that I posted in, let me kind of just keep scrolling up. Here we go. 8:31 a.m. Eastern. That was it. 32.61 by 31.61. This candle was just a nice high wave candle. It made a new low, right? A lot of volume was coming in, so I figured, hey, let me just see if this one ends up popping, which it did, very softly. So here's the chart still on the screen. Figured I'll pop over here to the 1 minute and just kind of show you, how I played this one. So a lot of traders played this one along with me. But the first 1 minute candle just had that nice high wave candle, and then it broke above and actually ended up retesting 2 or 3 minutes candle later, then popped. I was up about a little bit more than 1%, 1R in this particular scenario. Thought about exiting, but it looked good. I mean, if you look at the VWAP, which I don't use all that often, but the VWAP was holding up pretty nicely. I thought I was going to maybe try to do an S-curve bullish off the VWAP, something like this, and break above. But you can see the 10 EMA on the daily the 10 EMA on the 1 minute held it down. Once this breakdown came in and these bullish candles came in, I increased the stop. So I said, hey, there's no need for it to break that. And obviously won super small on that trade. I do want to give a shout out to my good buddy Joseph Sidoti, who was here in Nashville for an entire 5 days, getting his trading intact. And he scored himself 1.2 Rs on Big Lots. Actually taking it short pretty much where my stop was. So good job, Joe. And yeah, really nice rollover. So anyway, small game on that one. I did, for some weird reason, play AVGO bullish. Looking back at it, that was a really, really dumb decision. Here was the daily chart, and I knew this was going to fade. I mean, that was unquestionable that this gap was going to fade. You had that really just hammer of Thor candle, perfect shave top candle, obviously tons of buying sentiment, and this thing gapped up and kind of started hitting its head against the 200. Here was the 5 minute chart, and looking at it, I mean, I see why I took the trade, but it was pretty dumb. Here's your pennant pattern. So that thing broke down. I actually wanted to fade AVGO, right? Take it down bearish. And this was the candle, bullish high wave. I should have had an entry there, stop there, and I missed that setup. So when this came in, looked like some type of really strong morning star, and these candles had pretty much the exact same high. So my entry was there with a stop loss here, and I just got stopped out pretty much immediately for an R loss. So that was really dumb. But Andrew Hall did play that, and he got an R on it, which means I gave him my R. So Andrew, congrats. You played that trade better than I did, and well done, sir. He played it with a bounce down at this support and exit right here for a quick 1R gain, which was pretty much the only way to play AVGO today. So that was the loss, and trying to think if there's anything else. Loss on Apple, bullish swing trade, 0.7 Rs, 1.2 Rs on Big Lots, lost 1 R on this dumb trade, and made 2 Rs on SPY. So really small gain on the day, but a gain nonetheless on a pretty wild Friday. Whew! I'm excited to see what happens, my friends, after this weekend. For all my future traders, let's go have fun. Maybe we'll catch a little bit of a bounce, which I kind of expect. And then who the heck knows coming in Monday what's going to happen. I'll be here, though. Same time, same place. And until then, love life, and trade it. Bye.